Hello everyone. Today we will be talking an important topic: how to make consistent weekly income from option trading. We all know stock can perform three scenarios. Either it can go up or move sideways or go down. So is there any option strategy which can give us consistent weekly income in all these three scenarios at very less risk? And if the underlying stock takes a direction of either going up or going down, our heartbeat should not go up. And since we are very busy with our lives, it should need almost no adjustment. So I was researching a lot about different option strategies, and one option strategy which has given me consistent profit is triple calendar spread. Before we dive into video, please subscribe to my channel if you like content like this and like my video to support it on YouTube algorithm. Now, before talking about triple calendar spread, let's talk about what is a single calendar spread for beginner people. So here is my Robinhood account, and here I'm showing you a sample call calendar spread. You can buy a calendar spread either using call or put. Both will perform equally. In this example, I'm taking an example of call calendar spread. So I'm buying at the money, which is $440 by. I'm buying 21 days to expiry call, and I'm selling 14 days to expiry, same strike price call. Since the theta of the call which is closer is more than the theta of the one which we are buying, the theta gain gives us profit. So here is the example, the profit and loss graph of the calendar, the sample calendar which I'm showing you. If the SPY will move around in this area, we will make a good profit with this calendar. However, if the SPY will take a direction of going down or going up, then we will make some loss with single calendar spread. That's why I do triple calendar spread. I will show you three of my recent trades in which SPY moved both three, all the three possible scenarios where SPY moved down, SPY moved up, and SPY moved sideways. And I will show you how my strategy performed. So here is my one of my recent trade which I took on January 13th. On January 13th, SPY was moving around $465. So I bought one at the money calendar at $465. To take care of the directional move if SPY can take, I bought one more calendar at 485 since there was a resistance and SPY was coming at $480 and it was showing some resistance. So to give extra room, I bought one more calendar at 485 strike price. To take care of the downward move, I bought one at 450 since there was one more support here at 450. So I bought another calendar at 450 strike price. Now, as you can see, going forward, SPY went down. It took the direction, move, and it went down consistently in the next few days. So let's see how this triple calendar performed in next few days. I keep track of my trades in an Excel sheet on day-to-day basis. So let's jump to that. So here is my Excel sheet where I'm tracking all my trades. So on January 13th, I bought this triple calendar. The one which was at 450 strike price costed me $108. 465 strike price calendar costed me $121. And 485 strike price calendar costed me $24. So in total, for one lot of these three calendars, I invested $253. As per your investment, you can bought multiple lots of this. Now on January 14th, SPY didn't move much and my triple calendar was in a profit of 2.38%. January 15th and 16th was Saturday and Sunday. January 18th was Martin Luther King holiday. On January 19th, SPY went down by 1% and my calendar was in a profit of 11%. My strategy rule of thumb is Whenever the profit is about 10%, exit the trade and lock the profit. So some people lock at 15%, some people do at 10, some people that do at 7%. These are the normal numbers I have seen. Based on your strategy, you can pick a number, and don't be like we can't pick number like 50%. Yeah, it is possible, but it might not be feasible all the time. So plan your strategy and pick a number and be consistent. So I always lock my profit at 10%. It has given me good returns every week. 10% profit in a year, you can make up to 500 520% profit, which is 6 times your money, which is not a bad strategy at all. On January 20th, just for my documentation purpose, I have documented here, and the strategy would have given me 14.64%. But locking profit is the best strategy. No one goes bankrupt by locking profit. One more thing, if I would have bought a single calendar at the money 465, I would have made a loss of 18%. So here you can see in this example, the triple calendar gave me a profit of 11%. However, the single calendar would have given me a loss of 18%. So this was the example where SPY moved downwards and my triple calendar gave me a profit. Now let's move to another scenario where SPY moved sideways, how my strategy performed. So on September 18th of 2020, I entered in this strategy where I bought $330 strike price calendar, and based on the previous resistance level, I bought one more calendar at 345, and to take care of the down movement if spike can go down, I bought one more at 310 strike price. In the next few days, as you can see, the SPY moved sideways. So let's see how it performed in my Excel sheet. So this is the trade which I took on September 18th. For these three calendar, I invested total of $251 for each lot, and you can buy multiple lots as per your investment. On September 21st, SPY went down by 1% and my strategy was in profit of 0.8%. On September 22nd, SPY went up by 1%. So basically, SPY was just wiggling around, and my profit from this strategy was 9%. I was planning to take lock in this profit, but then since SPY was in 3 near 330 and my trade zone is also 330, so I thought I have more cushion to wait and I have more days also. So I thought let's wait and let's see if we can reach 10% also. So on September 23rd, the profit went down to 5.5%. Now on September 24th, the profit went to 11% and I exited the trade as it was about 10%. Now in scenario, if I would have waited more, the profit went up to 17 and 26%. But since my strategy is always locked, whenever you hit 10% target, I exit the trade. Now let's talk about third scenario where SPY moved upward, how my strategy performed. So on August 21st of 2020, SPY was moving around $340. So I bought one at the money call calendar spread at 340, and to take care of the directional move, I bought one more calendar at 350 strike price and one more calendar at 330 strike price based on the previous resistance and supports. Now let's see how this trade performed in the next few days. So going back to my Excel sheet, on 21st of August, I bought these three calendar investing $250 per lot. Now on August 26th, the profit was 17.6% from this triple calendar and I exited the trade since it was about 10%. If I would have waited longer, on August 28th, it went down to 12%. That's why I always lock in my profit whenever I have about 10%. It can be further down to 12 to 5% or anything. So whenever you reach 10%, exit the trade. And one more thing, if I would have bought just $340 single calendar spread, you can see I would have made almost negligible profit or a loss of 11%. So in this example, again, you can see the single calendar would have given you a good losses, but this triple calendar gave you a profit of 17%. So in nutshell, we have seen when SPY moved sideways, or when SPY moved up, or when SPY moved downwards. In all the three scenarios, this strategy gave you consistently 10% plus profit. Please like this video if you gained some knowledge out of it, and subscribe to my channel. I will be entering another trade coming this week, and I will be posting it here. So please subscribe to my channel if you want to get recent updates of my trades. And one disclaimer, I am giving this knowledge for your information purpose only. Please do your own research before taking any trades. Thank you.